Okay, so this is an update on our Tesla position. I made a video last week and uh, a lot has changed in a matter of a couple of trading days. So I just want to go over it, share some high level thinking, right? Kind of what our thoughts are. Myself and my business partner own Tesla, all below $200, and this is just one account. So I just want to go over kind of some thinking, keep it super simple because we didn't overthink this trade, and it's working out quite nicely, right? So basically, what I always do when I'm looking at technicals, I am the technical portion of this operation, and essentially, if we zoom out, it is always important to zoom out both from a macro perspective, a technical perspective, a fundamental perspective, a narrative perspective. You've got to look at the big picture, kind of see what's going on. And just starting with the technicals here, if we look at Tesla, right, it's so simple, yet so effective. But trend lines and levels that are respectable very cleanly and not very messy on a larger time frame, or at least in any time frame in my opinion, are levels that you want to pay attention to quite a bit, at least depending on how price reacts around those certain points. You can generate better ideas, you can get a better perspective, and you can be on top of this particular or any position. Matter of fact, if you could see the price action around key, and the key word is key, levels on any asset or any chart that has enough liquidity, obviously, and some real company to back it. But yeah, anyways, so let's look at Tesla. Basically, in the last video, I mentioned 200 is now the level that I want to see hold after the huge spike up in volume with this breakout essentially here. And 200 didn't even get tested. We basically had broken through this downtrend line with fervor, right? So one thing that I want to bring up is if we look at Apple, we can take a nice lesson or make some pattern recognition observations from the price action in this particular stock, right? So Apple is a very grindy stock, right? Every time it starts to come down too much, you want to buy, in my opinion. And basically, that's about it. It's a boring company. It's kind of everything's priced in. It's very mature at this point in time. And basically, things have changed recently, which kind of brought some life into the company, sparked up the price action, and made the moves very clean and the patterns more, I would say, like it increases the probability of patterns when stocks are in play. And that's basically what we saw happen in Apple, right? So basically, if we zoom out, same thing, always top down, right? Apple's been trading in a range from this 200 zone down to 165s, right? Especially for the last like year and a half, right? So zooming in, we get a much clearer idea as to kind of how Apple trades, especially on an intraday basis or a daily basis. And it's still very grindy, not much happens, quite a boring company. And basically, if we start to zoom in even more, look at the little details, start to form a better picture. Basically, this red candle right here was when Apple had their AI event. So the way that I saw this and the way that I was watching it going into the event is typically whenever a company has a forward-looking catalyst that seems like it could be positive or negative, there will be a bid going into this event, and then on the day of the event or once the announcement comes out, then that is when you could see a sell-off, as essentially this is a buy the rumors, sell the news type of procedure, right? So if Apple is expected to have some AI news and you know it's coming because everybody knew it was coming, right? You're buying in anticipation for them to announce it. But at that point, if this is a crowded stock, basically everybody has already bought, and once the news comes out, there is nobody left to buy, and that is how a sell the news play kind of develops, right? So Apple, still grindy. We hit this clear level of resistance. The AI event was right here. Prices had sold off very drastically as it happened, and in my opinion, I'm like, okay, we reached the top of a level, rejected quite nicely. Potentially we'll start to see this come back down to 170s, 165s, could be lower, and that might be a time in the future where we will be prepared to add to our existing position. But then the next day, huge volume came in. We broke out over 200, and the more important data point to observe is we broke through, we changed the tone in how prices move, and that basically was a super explosive change in character, and we saw a breakout with some fervor, right? So Apple, look at the volume, look at these huge candles relative to basically how it's traded for the last 2 years, right? So the fact that that happened kind of put Apple into play, and when a stock is in play, patterns typically can start to have a higher probability of working out in your favor if you can detect some patterns to play, right? As we see with this breakout above 220. So simple, yet it worked because Apple is in play, the market is moving up, and the volume is there. Right, so basically there's been a huge change in tone, some life springing into Apple, and some continuation to the upside when we see a breakout. So why did I bring up Apple? Because if we look over at Tesla, basically the same thing, right? 2020, 2021, Tesla traded so clean, so explosive. It was the Nvidia of its time, right? After that died off, prices came down, became more choppy, moves weren't as explosive. Still were, volatility is great on Tesla, but it wasn't like it was in the past. And as that steam started to die off, the negative sentiment started to become more pronounced. People became fearful, and then Tesla was an old dog that nobody wanted. Basically, people were saying Tesla is too expensive for an auto manufacturing company. But if you don't pay attention, that's what you'll say. We were paying attention. So as we were paying attention, we were accumulating shares as prices were coming down, as negative news was starting to spiral out of Tesla, and basically at least from my side, once we broke above this downtrend, that was the signal for us to say, okay, the narrative has changed, and now the things that we see in the pipeline for Tesla might be starting to be picked up by Wall Street, or at least the masses or investors who are participating in the stock, and we could start to see things start to ramp up again, but we need to see this breakout happen first. In my opinion, there was still potential that Tesla could have gone down to 125s, 100s before the breakout, which would have been nice actually, because prices would have started to get compressed on a large time frame for a much more explosive move to the upside. Regardless, I still think we saw that. So the reason why I brought up Apple is if we look at Tesla's price action, basically, I think this was earnings, correct me if I'm wrong, but Tesla started to become choppy, started to become stale. And over the last few days, as we have gone up like 30% plus and broke through this clear key level with fervor, the same that we saw with Apple, we can potentially start to see a continuation on potential patterns moving forward. So basically, how do I plan to navigate this Tesla trade? Well, if prices start to come down back to 230s and start to look like they're marinating once again, maybe depending on how other positions are in the portfolio, we look to increase and add on the confirmation. We will bring up our averages, but I believe now the tone has changed. The markets are pricing in robo-taxis. CNBC did a piece on humanoids, and as the narrative starts to pick up and people realize that Tesla is a leader in the humanoid race, which is a much bigger event than people realize, as now the US is competing with China basically in a robotics race. As that starts to play out and Tesla is seen as a leader, maybe we can see similar price action, or maybe even moves to all-time highs. I think it will happen, but where are the levels you want to add on the confirmation? So basically Tesla, as we get down to 230, that would be a potential zone for you to consider depending on your particular situation. This is not financial advice, it's just sharing our thoughts based on how we're managing this. And if that is not the case and prices start to push higher, the best way that I see managing this position is to sell some covered calls, right? So you could sell weeklies, but also monthlies. I think August 16th or August 9th calls will sell for about $1,200 a contract. And if you're good at estimating prices and seeing how things play out, or waiting for the extremes, then you can start to sell premium at a premium, right? So that's basically how I'm seeing the Tesla trade. The fact that we have broken through this key level with fervor is a pretty important data point for me to collect. If we fail, shit, the entire trade has changed in my mind. I don't see that very likely at the moment. In my opinion, the probabilities are leaning more towards a continuation, just considering the scale of the move, the volume that's coming in. Another thing I like to look at too is if we zoom out, right? Maybe if we even go to the monthly, right?